California is in the middle of a home insurance crisis. Tens of thousands of homeowners are getting cancellation notices from their insurance companies, and home buyers are struggling to find homeowners insurance so they can complete the purchase of their property. So in this video, we're going to talk about what's going on with the California homeowners insurance market, how we got here, and most importantly, what can be done to fix it. So let's get to it. Welcome to the Thriving in the Bay Area channel. I'm Rich Fleming, your local realtor, and I'm here to teach you everything you need to know about living, working, playing, sleeping, eating in the San Francisco Bay Area and about Bay Area real estate. I do these videos for a couple of reasons. One, I've moved places and not known anyone or anything when I got there, and I know how tough that is. And secondly, real estate is actually a pretty complicated subject, and most people don't really understand the dynamics that go on in the marketplace. So I'm here to teach you a little bit about it. So if you got questions, you know what to do. Drop me a text, give me a call, send me an email. Click the link in the video description below. You can schedule a 30-minute appointment with me to ask any questions you may have about living in the Bay Area or Bay Area real estate. Now, let's jump into what's going on with the California home insurance market. If you've been following the news in recent months, you may have seen the headlines about California's home insurance crisis. Now, admittedly, California is not alone in facing this challenge. Florida has also been in the headlines facing similar types of home insurance problems for homeowners in that state. Here in California, tens of thousands of homeowners have gotten cancellation notices, or if they're quote unquote fortunate enough to keep their insurance, they're getting significant premium increases of 20, 30, 40, even 100% because of the challenges in the state. I myself recently received a cancellation notice, and I had to jump through hoops to show the insurance company that why they were canceling our policy was not actually valid. So it is something that is impacting a lot of Californians. One of the most shocking aspects about the current insurance crisis in the state is the major companies that are no longer writing new home insurance policies. And these are companies like State Farm, Farmers, Allstate, USAA, Nationwide. That is just astounding because they really dominate the home insurance market. And over the last 18 months, it has become a situation where especially new home buyers have to really consider and find insurance really before they actually find a house to buy. And this is because if they can't get insurance, they can't get a house if they have a mortgage on it. Let's talk about how we got into this situation. And before I jump into that, please understand I am not an insurance expert. So if you know more about property and casualty insurance than I do, please feel free to drop your comments and explanations in the comment section below. But I'm going to give you the best that I was able to determine from my research. And based on that research, there are 4 reasons that we are in this current situation. The first is a law that passed in 1988 called Proposition 103. It was a statewide ballot initiative that passed, and it really put restrictions on the activities and behaviors of insurance companies in California. This came about because there were accusations that insurance companies were treating consumers unfairly and that they were raising auto and home insurance rates without any basis for those increases. The proposition gave the state insurance commissioner the ability to regulate the premiums charged by insurers. And if I recall correctly, any rate increase of more than 7% has to be approved by the state. It also determined how rates could be evaluated and raised. And at the time, they decided to use a formula that was backward looking. And if I recall correctly, it looks at the collection of premiums versus to the payouts over the previous 10 years. It also doesn't allow insurance companies to look at future projections, include the cost of reinsurance, which is essentially insurance for insurance companies, nor can insurance companies consider the risk associated with an individual's property's fire risk. They either have to essentially insure an entire area or not insure anyone in that area. One of the major arguments that insurance companies make is that Proposition 103 is just too outdated. It takes the insurance commissioner way too long to make decisions about premium changes. It doesn't allow enough flexibility for insurance companies to determine individual property fire risk. The companies can't consider the cost of reinsurance, which is essentially insurance for insurance companies, in their rate calculations. And in recent months, the cost of reinsurance for insurance companies has increased dramatically. And maybe most importantly, from the insurance company's point of view, the current methodology does not allow them to consider future projected losses. They have to base everything on past losses. This is a major issue for them as they are more and more concerned about risks related to climate change. And that leads us to the second factor, climate change, and more specifically, wildfire risk. Now, back in 2016 and 17, the state saw its worst wildfires ever. In 2017, the insurance industry paid out $1.85 for every $1 in premium it collected. Now, I'm not an expert on insurance, as I mentioned, but I know that is not sustainable. But what the insurance companies are asking for is they're saying, hey, we know that wildfires are just going to be an increased risk in the future, and we need to include that in our risk calculations so we can set premiums accordingly. And currently, they are prohibited from doing that. The third factor is inflation. The insurance companies claim that the cost of rebuilding homes after a disaster has skyrocketed. And this is not being reflected in the rates they charge because, once again, they have to average the expenses that they pay out over the past 10 years. Well, the cost of things 5 years ago is dramatically different than it is right now. They want to be able to consider the current cost of reconstruction for properties in their rate calculations. The fourth factor is something called the FAIR Plan. Now, the FAIR Plan is a state-administered fire insurance plan for the most at-risk properties. It's essentially supposed to be the insurer of last resort. What a lot of people don't understand about the FAIR Plan is how it gets its money. Now, one of the biggest challenges the FAIR Plan is facing is financial instability, and this is due to its funding formula. Most people think that the FAIR Plan is funded by the state, and it isn't. The funding for the FAIR Plan comes from two primary sources. Individual insurance companies make contributions to the FAIR Plan based on the number of homes they cover in California, essentially their market share, and the premiums from individuals who pay into the FAIR Plan. What's ended up happening in the last few years is as insurers cut down on the number of homes that they're covering, they are contributing less to the FAIR Plan. While those individuals that have lost coverage and can't get it anywhere else are forced into the FAIR Plan. Thus, there is not enough revenue for the plan as its risk portfolio increases, its source of revenues are being decreased. This is leading to dramatic increases for FAIR Plan participants in their premiums. Those four factors combine to get us into the situation we're in now. But the real question is, how do we fix it? Now, I'm no insurance expert, so I can only share with you what I have read as far as potential solutions. Many consumer advocates say that the insurance companies are essentially blackmailing the state insurance commissioner to force them to give them the increases they want, and they're punishing California consumers until they get what they want. They argue there's no real reason to make major changes to the system, and really the insurance companies just have to be called to task. On the other hand, the insurance companies are saying, hey, the world and the risks we face are not the same as they were 20, 30, or 40 years ago. Here are the things that the insurance industry is suggesting would help solve the problem. First, they want the insurance commissioner to make decisions on premium adjustments much faster. They claim that it takes the insurance commissioner anywhere from 12 to 18 months to make a decision. They would like to see that cut down to 6 to 9 months. Second, they want to be able to include the cost of reinsurance in their premium calculations. Third, they want to be able to use the current cost of rebuilding a home in their calculations. They don't want to have to average it out over the previous 10 years. Fourth, they want to be able to use forward-looking models that estimate the risk to them of climate change, essentially the increased risk of wildfire. It's my understanding that that is prohibited by law right now. Fifth, they want to be able to look much more in detail at the individual risk a property faces to the insurance company, as opposed to what the risk of all of the properties in a given area are. For example, if an insurance company covers a city and one homeowner lives in the center of the city and the other homeowner lives on the very edge of the city abutting a forest, well, the chance for wildfire damage is probably not the same. But it's my understanding that everyone in that city essentially has to be treated the same way under current law. So what's the solution to all of this? Well, I don't know. I'm not an insurance expert. I'm a consumer that has definitely been impacted by the insurance crisis here in California. I am a business person who is seeing clients struggle to get insurance. And I'm also a business person who understands the cost factors that goes into running a business. So I have a bit of sympathy for all of the parties in this crisis. As a business person, I definitely feel the insurance companies should be able to consider the cost of reinsurance and the risk that individual homes pose to them. I don't think as a consumer, if I live in a relatively safe area, I should be subsidizing the cost and the risk for someone who chooses to live in a far more fire-prone area than I choose to live in. I also think if you're going to use forward-looking models, then there has to be some regulation as to how those models are constructed, what factors and variables go into them, and how the outputs will be used in creating future premium decisions. Finally, I also think a mechanism has to be built in that if you're going to allow the insurance company these additional flexibilities to quite honestly increase consumers' rates, there's got to be some mechanism to make sure that excessive profits are clawed back and given back to consumers. I have no problem with a business making a profit, but insurance companies, to be honest, have not always been the best stewards of public interest. So there does need to be oversight from my perspective. Now, the insurance commissioner, Mr. Lara, has promised that he is going to have a proposal by the fall of 2024. Now, I am filming this in early June, so hopefully we're 3 or 4 months away from at least some good momentum or movement on solving this problem. But at least for the next 4 to 6 months and probably longer, consumers are going to be caught in between these opposing forces, the do-nothing forces and the insurance let us do everything we want force. So I just hope that there is some very thoughtful negotiation and strategy that goes into solving this problem. When I started this channel, one of the first videos I did was about the natural hazards associated with living in the Bay Area. So I'm going to put a link to that video somewhere here on the screen. Take a look. If you enjoyed the video, give it the thumbs up so YouTube knows to show it to other people with interests similar to yourself. Hit the subscribe button and hit the bell notification so you know each and every time I drop a new video. And I'll catch you in the next video.